Hello traders, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is daily analytical report. So I will tell you what's going on the market from the fundamental and technical point of view. We are after FOMC, which was yesterday. So market is now digesting this what happened yesterday evening European time. FOMC was perceived as dovish. Fed is seeing some problems with inflation. That is why we came back to the main trends seen recently on the chart. So American dollar is weaker, emerging markets currencies are higher, commodities are higher like gold and other metals. WTI, Brent oil is also higher, but mostly due to the data. And we have another all-time highs on world stocks, MSCI World Index. So what happened was fundamentals came along with the technical analysis, which is absolutely great for the technical traders. And the situation, I think, continues for quite a long time, and that we will have a signal from technical analysis, and it is later supported by the fundamental events. At least that's what I'm seeing as I'm investing, trading, analyzing instruments only from the technical point of view. And those signals that we give, and you can check that on Trading Sniper daily analytical reports, it's all recorded. Most of the signals that we give, price acts as expected, and those trades, those occasions are spot on. So today, Thursday, let's try to look for more good trading occasions. But first, as always, we need to check the unfortunately, after yesterday fireworks, which were obviously caused by FOMC, today the calendar is rather empty. So we don't have tier 1 market events, but I guess it's a nice stop for us to digest this FOMC and to prepare ourselves for Friday, where we will have GDP from United States. So this will be the main information today, and many people are waiting for that. 2.6 is expected. That will definitely, well, it should rock the market tomorrow. As for today, as you can see, not so much. Durable good orders, yes, usually there are influential on the price, but we'll see if it will be the same this time. Well, if we don't have tier 1 data, maybe durable good orders can help us to move the markets a little bit. Apart from that, really from the fundamental point of view, not much happened. Let me show you also this week. I want to show you one thing. Monday, Tuesday, Wednesday. Yes, we got TIA crude oil stocks change yesterday. As you can see, minus 7 million, minus 2.6 was expected. That is why oil is relatively high at the moment. Actually, we can start with that. So let me just change the account. And this is the oil. Okay. Today we see a bit of decline. I hope that the price will get there, where I saw a combination of 4 important resistances. Well, yes, 4. Let's say 4. A downtrend line, uptrend line here, upper line of the wedge formation, horizontal level, and 61.8. But the price didn't wait to get there. To be precise, this trend line is here. If we use the heads, okay, so we didn't break it. If we consider shadows as well. But we are above 61.8, which is definitely positive. We are above this horizontal resistance. We are above this one, which is absolutely positive. So 3 out of 4 were beaten. I think that buyers can call that a success. Full success will be once they will be able to break this horizontal resistance. Even with that, well, price action will be telling us that we should buy. I'm not gonna follow this signal, even if the price action will tell me that, because in general, oil is a bit risky right now because of the possible Joe Morning talks, speeches, rumors from OPEC countries, etc. So the Arabia and disruptions in oil transport, oil production, etc. So I try to perceive my capital, respect it, risk less to earn more actually, and environment on oil is not good for that at the moment. We had some trades on oil and they were very good, but at the same time I'm fully aware of the risks on oil right now. It's good for speculation for the guys who do not take the risk control, money management too seriously, as serious as I am. DAX, this can be considered as a false breakout, but they stopped on the first important resistance marked with the green color here. So that can be perceived just as a correction. As I said, as long as they stay below those two, the sentiment is negative. So DAX has serious problems. Not like S&P 500, which is climbing higher and higher and higher. As you can see, maybe I will change the time frames. In trading, I'm not using lower time frames. I'm focusing only on higher time frames. And as you can see, today almost, what was the high? 84.6, and those were 84.1, 84.6. So we made the same highs as yesterday, all-time highs. Obviously, the sentiment is definitely positive. This wedge can be a problem though. A breakout of the lower red line can bring us a bigger correction. But, well, bigger, when I say bigger in terms of the S&P 500, it's like 20-30 points. So it's not a biggie if we consider the length of the trend and how high we are at the moment. Okay, so now we can come back to the forex market. First we can start with the dollar index, which is going lower and lower. As you can see, FOMC brought the dollar index to fresh local lows. Now we do have a correction of that, but obviously the sentiment is negative. As long as we stay below the red line, that's the first local resistance. That's the second one, I would say. Maybe this is the second one, okay. Those are local trend lines. Breaking the first one won't trigger a buy signal, breaking this one as well. Only breaking this one can trigger a midterm buy signal here on this instrument. Otherwise, I do not see it. If we consider this as a local bottom, okay. We do have Fibos. Let's play a little. 38.2. Support, resistance. Here. Alright, basically it's how it looks like. Only breaking this resistance. So 38.2 Fibonacci and this horizontal resistance only breakout here can trigger a midterm buy signal on dollar index. Next instruments, my friends. Cable is on a midterm, well, long term actually. Maybe, well, they are on the highest level since September 2016. For me, it's midterm. For maybe some of you, I think most of you, it's a long term, because I know that most of the retail traders, they trade on M15 or smaller time frames. So for you, it's probably ages. So we are on the highest level since here, the first potential target. I think that if we are here, we are so successful, they should eventually reach this resistance, which is 300 pips higher. Well, for cable, it's not impossible. I would say that maybe not this month, maybe not the next one, but eventually in the third quarter, they should get that, or fourth. We will see. But the sentiment is positive, definitely. You cannot tell if someone's telling me that the sentiment on a cable is negative. I ask why? Why? Just, I know long-term sentiment, yes, because of the Brexit, and because here in 2016 in June we were much higher. But now, again, we are on the highest level since September 2016, which in my opinion sets the sentiment as positive, and so far we do not have any signals for a possible reversal. First signal of this kind will be the price breaking this black line. In this case, that would be a wedge, but not this wedge that continues trends. It's a wedge with the trend. So it's this negative one. Euro dollar is correcting this movement from yesterday. The correction is quite sharp, but as you can see with this breakout, we went to the highest levels since the very beginning of 2015. So we broke this top from August 2015. The next potential target is here. We will see. I'm not the fan of entering on such high levels with the trend, although always the chance for a trend continuation is much higher than the trend reversal. But I'm not feeling comfortable on the market when I enter the market on such high levels. It's not my style of trading. I would wait for a comeback, for example, here to this line, to this red line. I would wait for a reversal pattern here. It would be much better for my for the way how I perceive markets. Right? The price here, bullish pattern, and then a comeback. American dollar to Canadian dollar. Here it's a quite interesting situation, obviously. We have this channel down. It's with us for a long time. We had an attempt for a false breakout yesterday ahead of Fed. Then American dollar got stronger, but look at that. It's hourly chart. I'm not using those lower time frames, as I said, but I want to show you one thing. This is inverse head and shoulder formation. I think that this tail, we can forget about this tail. That's an inverse head and shoulder formation, and now we're breaking this horizontal resistance. It's not a neckline. Neckline was latest lows here. Those we can remove those Fibonacci's because it's no longer relevant here. Those recent lows were the neckline. Now we are breaking this resistance. Maybe the correction is coming, like a deeper correction. The signal for opening a long position will be after definite breakout of this resistance. That wasn't a definite breakout. Price needs to close high above the downtrend line, and that can give us 90 pips, 100 pips potential target here. Next one is American dollar to Swiss franc. Here we do have a huge reversal. Swiss franc is is on a back foot right now, and look at that. Left shoulder head and the right shoulder. This formation is very clear. You can see that. So this red line is the neckline. Actually, very similar situation to here, right? Inverse head and shoulder formation, neckline, and the horizontal resistance above. Inverse head and shoulder formation, neckline, horizontal resistance above. Here, if the price will close above this resistance marked with gray color, that should open away first here, and then after the breakout here. Australian dollar to American dollar. Let me change this for another color for better visibility, because that can be a good trading occasion here. Let me also measure those corrections. As it is rectangle, all those movements are more or less the same. So this one is more or less the same as this one. That would be perfect, guys. If we would have a downswing, correction equality pattern, which in this case is around 90 pips, and that would be on a local support created by those resistances, right? So here, if I would see a hammer or a bullish engulfing, that would be a very desired setup here. And I'm gonna watch this carefully, and maybe we'll try to trade it. Because again, Australian dollar to American dollar is very prone to correction equality patterns. I remember not so long time ago, a few months ago, when Australian dollar to American dollar was having 12 the same corrections in a row. Not 5, not 7, but 12 the same corrections in a row. That is another one, British pound to Japanese yen. Here we do have this inverse head and shoulder formation, and you remember yesterday we are telling about the possibility of an upswing, and we are on the highest level since 18th of July. So indeed we do have an upswing. We are above the support, and the potential target is here. It was much better to enter this position when we are talking about that. So here with a stop loss of, for example, 60 pips and potential take profit of 200 pips, which makes a desired risk to reward ratio. Now the potential risk to reward ratio is a bit worse. 100 pips risk, 130 pips profit, slightly. That's not the risk to reward ratio that you should be looking for on the markets. You should be looking like 3 to by 3 to 1, I mean potential reward, potential profit should be 3 times bigger than a potential loss. American dollar to Mexican peso, that's another instrument that we are talking about. Yesterday here there was a shooting star, and we are telling that it's a great place for a shooting star and great place for going short, because that's a local resistance created by that support and by 38.2, and that actually worked out perfectly. So we're happy with that. Silver is aiming very important resistance. That's a combination of this trend line, this horizontal resistance here, and this uptrend line here, maybe on like that here. So it's a wide area. Maybe those resistances are not crossing exactly in the same place, but as I said, it's rather a wide area where the magic can happen. It should be like that. Right, so we are, maybe this uptrend line was already crossed, but we still have 3 left. Downtrend line, upper line of the channel up, and the horizontal one. let's do it like that. This is the place where we should be carefully we should carefully watch price action on silver, because we can get a strong reversal. Next one is gold, which I like very much. I like what I see here, because what I see here, that was a good one, and luckily we're telling about that on our channels. I hope you use that, because that gray area, very important, resistance, support, after the breakout, resistance, right? And the price created a head and shoulder formation there, which triggered downswing, which stopped on a uptrend line, went to test the neckline, positive, then we got a breakout, and then we stopped on a local horizontal support, which we warned about that, which we were telling about that a few times on different ways, on daily analytical report, or on trading sniper, on analysis, or on different portals. And obviously help from FOMC came, and we got a breakout of this level, and now currently it will be the closest support. And also it gives us a potentially very good trade in terms of risk to reward ratio, because if we consider that as a relevant strong stop loss, you can have a support, you can have a stop loss here, for example, which will be, let's say, $10 lower, and here you can get $30. Again, potential profit 3 times bigger than a potential loss. That's the ratio that is good, and that's the risk which is worth taking. New Zealand dollar to Japanese yen. This one is a good one, especially for long-term traders. I know that we don't have many long-term traders in retail trading. But if you want to have if you want to be a carry trader, if you want to have a position where you can earn money with swaps overnight, and it can go the good way, so not only earn on the swaps but also earn on the actual position, I think that can be a good one, interesting one. What do we have here is an upswing, right? We recently had a correction. Well, recently, it's a long-term chart, it's a weekly chart, so we do have a left shoulder on 2015, head on 2016, and right shoulder 2017. So this is a inverse head and shoulder pattern, which shows us that this decline should be reversed. And now we also broke the downtrend line here, but we stopped on the neckline. This blue area is a neckline. We stopped for 3 weeks actually, and now we're trying to break it. And if this candle will break it, and by that I mean if this candle will close to weekly highs above the blue area, that will be a trigger. That will be a sign to open a long position. That will be a sign to open long position on New Zealand dollar to Japanese yen. And I will show you those New Zealand dollar to Japanese yen. Specification here you can see swap long 4. Right, so we can get positive swaps every single night just by having currency with higher interest rate and selling the currency with lower interest rate. That's a good one for carry traders. American dollar to yuan. I'm seeing an interesting thing here, because it's quite opposite to the main trend. Because the main trend now, what is the main trend? The main trend now is a weaker dollar, right? But here I can see a buying opportunity. Why is that? First of all, that's what the trend is. Also, We do have a flag, which is the trend continuation pattern, so we should, and yes, we do have a correction, but it's inside of a flag, which is a trend continuation pattern, so in general, we should see a trend being continued. Also, what I'm seeing here is a bounce, is a demand on a local support, and by local support, I mean this green area, which is with us from December 2015, or from January 2016 to be precise. And what is more, what I'm seeing here is a reaction. So that's a bounce. That's a bullish bounce from a local support because that's what this candlestick is telling me, and this candlestick is a hammer, right? So it looks really promising. It looks good. It's kind of also a double bottom formation, which I'm not a fan of. 672.09, and here is 674. So it's not like the best double bottom, because the second bottom should be lower, but it's still alright. And I'm not chasing double bottoms or double tops, because I do not find those setups reliable, but I do find hammers on important supports reliable if they show me potential trade in the direction of the trend. I do like that. Next one is American dollar to Japanese yen, so they couldn't force this green resistance, which you may see it's exactly in the middle of the symmetric triangle formation, and when you look at first it may not be relevant, but if you see how many times it was respected, even if it's in the middle of those movements, you can see that yes, it is important, and now it will be the closest resistance, and as long as we are below this resistance, the sentiment is rather negative. Next one will be American dollar to Polish zloty, which is almost on midterm lows, and I don't see any signals that this trend should reverse. Euro to Japanese yen here, we are waiting for a nice breakout. As you can see, the pressure on the local resistance is rising. Okay, and that shows us, well, first of all, we do have a pennant, which is a trend continuation pattern, so trend should be continued, trend is bullish, and we do have the sideways trend below the upper line of this formation, which is promoting a further upswing. And the last one, Australian dollar to Japanese yen. This one, you remember New Zealand dollar to Japanese yen, a bit similar position situation. This is also a weekly chart. We can see kind of inverse head and shoulder formation, and we also stopped on this line, but it's not a neckline. It's just a horizontal resistance. The candle from the last week is definitely negative because it's a shooting star, and we are not above this horizontal resistance, so I wouldn't open a position here. If you're looking for a better setup, it's better to look at the smaller island there, so on New Zealand to Japanese yen, and I think that setup can work better than this one. They are similar, but I think New Zealand dollar should be stronger against Australian dollar in the nearest future. Thank you very much, guys, for watching Daily Analytical Report. I hope I showed you some nice trading setups. See you tomorrow, obviously, on a Daily Analytical Report, but don't finish for now, because in half an hour we do have a webinar about trading psychology, and I do strongly believe that trading psychology is the most important factor that you can ever think of when trading. If you want to be a profitable trader, it's all about trading psychology, so I hope to see you all there. Thanks very much, and goodbye.